Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar slips lower in the Thursday session as profit taking increased while its rival, the US dollar index, which measures the greenback strength against a basket of six major currencies, extended its gains from the 3 months lows after data showed signs that the US economy is slowing. According to the US Bureau of Economic Analysis, October annual PCE price index came in on forecast at 3%, down from the previous rate of 3.4%, while the annual core PCE price index for October matched forecasts at 3.5%, down from the previous rate of 3.7%. Also, in a separate report, the weekly jobs claims in the US rose 7,000 to 218,000, slightly below the forecast of 220,000, but higher than the previous figure of 211. As Friday now brings the ISM PMI report and two speeches which are given from US Federal Reserve Jerome Powell. No doubt the upcoming speeches could influence much of the markets as the US dollar could take another tumble, and therefore for the Australian dollar see a revisit towards that top side objective around 67 cents. And I still feel there could be an extension on towards 68 cents towards the end of this year. While any pullback views support around 65.70 and a short-term base around 65.20.25. Having broken the short-term trend, the euro took a heavy tumble on Thursday and now looks towards the support area of 108.65 to around 108.15.30. As I mentioned, the dollar did rebound and settle around 103.40 in New York. However, I feel the market still holds to a downside target around 100 to around 100.50. The reason behind that, because it did break a significant support line, and therefore looking to the downside should encourage renewed momentum and see the challenge back towards 110 and maybe extending on to 111. The dollar yen staged also a bounce, but likely to see this fail. In light of the technicals, they are negative, and therefore I do feel the market should take another tumble back towards 147.5 and potentially down to 145, with the objective around 144.5. Renewed upside tests beyond 148.5 should give opportunity for the bears. Sterling also weaker overnight after Bank of England Governor Andrew Bailey repeated comments from a few months ago after saying the UK Central Bank will do what it takes to get inflation down to 2% target, adding that he had not yet seen enough progress towards the goal to be confident enough to even give any discussion on cutting interest rates. Looking to that, the market is no doubt likely to find further demand as we get closer towards the support area around 125.5 to 125.75. I feel this uptrend has still got potential and therefore look towards a region of 127 and on to 129. The gold was also a little bit weaker overnight. As we can see here, the market retreated away from that key area, which is around 2,060.65. However, we're not quite broken down, and don't get too overconfident to the bearish case as of yet, as the market could see a test there or even maybe make a new high, but not sustainable, as I feel there is a bull trap anywhere above 2,060.65 and eventually may see a significant downturn if we see a rejection back towards 2,000. Wrapping up with oil, well, the market was a bit whipsawed overnight after the meeting given by OPEC disclosed at its 36th ministerial meeting that it agreed to cut monthly oil output by an additional 1 million barrels per day starting in 2020. However, the market falls slightly short of the expectations, therefore the market was whipsawed. It did take a stab at that top side level of 77, 80, 90, but rejected quite quickly, and I'm not ruling that due to the fact that there is a bit of bullishness still holding, and we could see a break towards that top side that may see from 77, 80, 90 to $82 a barrel, as this pattern does represent somewhat to an inverse head and shoulders. We've got a shoulder, head and a shoulder, and a trend that could see a push and the measured move from the bottom of this support to the head. Break gives a trajectory of 82 figure 45. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.